I'm just gonna let everybody in. Disable the waiting room so people can just come in afterwards. Okay, what we'll do is we'll start recording the intro that we'll use for each question, basically, because we're gonna carve them up into 16 separate videos. So, hi, my name is Derren Joseph from Tax. We're the team that seeks to demystify the sometimes confusing world of international tax. So today we're going to talk about US-Spain tax issues. And to guide us along this interesting road, we have Ricky. Ricky, please introduce yourself.
Well, my name is Ricky Gutierrez. I'm a tax advisor at Gutierrez Pujas and Partners. It's a tax firm located in Barcelona, Spain. I mean, we've had international experience for over almost 20 years. And well, I'm here to try to answer the most of the questions you guys have in terms of international tax and taxes between the US and Spain. And well, I'm just like here to help you in anything you guys need.
Fantastic. So, Wendy, you now have the intro that you'll use for each question. So, guys and ladies who are coming in, we got all your questions, including the last minute barrage that came in over the last 36 hours or so. So, we'll get to them in the order in which we received them. So, the first one is, what is the difference in tax treatment between this startup visa, otherwise known as the nomad visa, and the regular Beckham law that existed previously, please?
Yeah. So basically, last year it was introduced early 2023. There was like this new
Hmm.
law. It was called the startup law, and
Hmm.
inside this law there was this type of visa which was called the nomad visa.
Hmm.
There's a difference here that a lot of people they can like get mixed because one thing is the nomad visa, it's a type of visa, and the Beckham law is an special tax regime. So
Hmm.
it's two separate things. The
Hmm.
things that people that is able to apply to the nomad visa, they are able to apply to a similar tax regime to the Beckham law. Basically, the
Hmm.
benefits are quite similar. So it's people that are able to stay in Spain with a type of visa, but
Hmm.
not be considered a Spanish tax resident. So it's the same thing as the Beckham law. One of the differences between the two is
Hmm.
that the Beckham law lasts for 6 years, while
Hmm.
the special tax regime that you're able to apply with the nomad visa, you're only able to apply for 5 years. Um, in the end,
Hmm.
because I was recently talking with an immigration lawyer, this person told me that a lot of people that applied to the nomad visa last year, now they are having a lot of issues to be able to apply to the special tax regime,
Hmm.
because apparently the tax authorities did like mixed it up, and well, they kind of like messed it up a little bit. So now a lot of people is trying to get rid of the nomad visa, and then try to apply to a different type of visa and then apply for the Beckham law. It's something that we still need to explore because obviously we've had this nomad visa for just 1 year, so
Hmm.
it's quite new. So
Okay.
whenever we have people
Hmm.
that are coming to us for advice, we normally recommend trying to apply to some type of residency visa or working
Hmm.
visa, and then try to
Hmm.
apply for the Beckham law, because the Beckham law is something that it's been with us for over 10 years, because it
Wow.
was introduced in 20 I think in 2010, something like that.
Hmm.
So a lot of people is benefiting for this.
Okay, so that is interesting. That is kind of like breaking news
Yeah.
that that this, because the intention was, in theory, the tax regime under this startup or this nomad visa was more attractive, right? Because, I mean, yes, it's 5 years instead of six, but you didn't need to set up a company, and it just
Yeah.
seemed to be an easier process. But now we're seeing that the tax authority isn't as familiar with it, so therefore
Yeah.
people aren't able to avail themselves of it. So
Yeah.
That is interesting, unfortunate. But I guess it'll take time to work through, and eventually they'll
Yeah,
figure it
yeah,
out.
for sure. I mean,
Mhm.
obviously with new things, I mean, not everybody is like as fast as other people to be able to catch up with these new things. And at some way the tax authorities are kind of like they are like a little bit of old-fashioned.
Mhm.
So it will take a little bit of time for them to get used to it.
Okay, all right, that's fair enough. Next question. How have foreign tax credits applied with the Spanish tax authorities? So, for example, income arises, let's say, from the US, and it's therefore the US has primary taxing rights. So you should, in theory, get a tax credit against this Spanish tax liability. How does the tax credit mechanism actually work?
So basically, the way it works normally,
Hmm.
foreign people that are considered Spanish tax residents, so they need to file Spanish income tax. Normally, they file their, in case in the US, obviously, you need to file in both places because of the citizenship. You're required to file in the US, and then need to file in Spain because of the tax residency.
Hmm.
Normally, what the Spanish law says is that you need to file first in the country where you're obliged. In this case, it's the US because of the citizenship,
Hmm.
and then you will file in Spain. And then in Spain, there's a bracket where you can deduct what you paid in the other country in Spain. Obviously, we need to check in the double taxation treaty. Normally, you're able to deduct almost 100% of what you paid in the US, but
Hmm.
we need to check the law because maybe some things are not like 100% deductible. But normally you are able to deduct most of what you paid in the US. This way you are not double taxed.
Okay, that's important to know because nobody wants to be double taxed.
Yeah,
The
correct.
next question is also quite controversial. We get this all the time. I'll kind of rephrase it a little bit. How do the Spanish tax authorities look at US LLCs and US S corps? Basically, the tax transparent corporate
Yeah.
entities we have in the US.
So the we've had this type of issue. It's quite
Hmm.
common. A lot of people
Hmm.
having LLCs and S corps.
Hmm.
Here, obviously, they are treated as transparent companies. So
Hmm.
basically, everything that the company generates. So basically, well, at the end of the year, when the company has its benefits.
Hmm.
All the benefits are added to the shareholders' income tax.
Hmm.
Here in Spain, it's really the same. So you need to
Hmm.
all the benefits that you get from the company, you need to include them in the Spanish income tax. What we normally advise, or what we think is best
Hmm.
in terms of taxation and kind of like to avoid
Hmm.
these benefits from the company being taxed in Spain, it's if it's possible to try to convert the company instead of an LLC, a regular LLC or an S corp, trying to convert it into a C corp.
C corp.
This way the company it's taxed as itself, and then if you want to
Hmm.
dividends or if you want to do like a loan or something, then it's something different and it's not taxed in the personal income tax. Obviously, if you
Hmm.
do dividends, then you need to declare that dividend. But
No.
this way, it's two separate things.
Hmm. Right. So there's nowhere really to defer income. It becomes a challenging proposition, especially since most people would tend to be like single member LLCs or just one person with an S corp. And then if they are operating that company from Spain, then in international tax, that creates a permanent establishment. So
Yeah,
there's
yeah, it could create a permanent establishment. And also, if you're like doing the business and everything here from Spain, obviously in Spain you cannot be working for, let's say, a foreign company and not paying any social security, basically not being
hmm.
registered in Spain. So
Hmm.
normally what we do with this type of people, either they become an autonomous,
Hmm.
uh, then they invoice their US company. So at the end of the year, the net profit of the company is zero. This is one idea that we do, or we just tell them you can either liquidate the LLC and just invoice as an autonomo here in Spain to your US clients. But
Or
it depends.
maybe form a company in Spain,
Yeah,
maybe.
correct.
Okay. And what about, and this is a question from somebody, I won't call your name, but this person goes on to say, well, what about when you have a partnership? So let's say an LLC with two members, and the person in Spain is receiving a guaranteed payment. So it's a guaranteed distribution. So I'm guessing based on what you've said so far, it really depends on the nature of the business and how it's structured. So is this person sitting in Spain doing nothing, and the team in the US is doing all the heavy lifting, and so they're basically like a passive investor?
Yeah.
Or are they actively engaged and working in that partnership? And therefore you have the whole thing with permanent establishment all over again. So
So
is that a fair assessment? It depends.
So in terms of the permanent establishment, if this person or if this shareholder has some type of decision making, if they're like deciding things,
Hmm.
they're able to close agreement with clients.
Hmm.
Basically, it's having like a lot of impact inside of the company, then
Hmm.
obviously create a permanent establishment here in Spain. If this person is also working and getting a salary from this US company,
Hmm.
obviously this person it's working here in Spain in the wrong way, because obviously the company will need to be registered in Spain. This person
Hmm.
should be under a Spanish employment agreement and also paying social security. Both the company should be paying the social security for this employee. If this person is basically not doing anything, everything is done in the US. Also, partnerships are kind of like the same way that they are taxed. Everything at the end of the year,
Hmm.
whenever you need to whenever you need to close the accounts for the company, and you have a benefit, and this
Hmm.
benefit is distributed to the shareholders. Obviously, this is also taxed in the Spanish tax return for this person, the same as if it was like a regular LLC. Yeah.
Fantastic. I think that's crystal clear. Thank you very much for that. With the person who asked that question, they kind of put it in bold. So I just want to make sure that you got that answer. And if you want to follow up, you can reach out to Ricky to probably take a deeper dive into your situation afterwards. Next one, what about channeling US source investment income through a Cyprus or Malta structure? Have you seen that, and what are your thoughts on it?
So we've worked, I mean, here, obviously, we're focused on international clients.
Hmm.
We work with many jurisdictions in the EU, also the US and in Asia.
Hmm.
We've worked quite a lot with Malta, obviously,
Hmm.
because it's an attractive jurisdiction in terms of
Hmm.
taxation.
Hmm.
I think with Malta and Cyprus, these two types of jurisdictions, they are very common with people, for example, that work with trust in the US, because they kind of like have their laws are more, how do you say it? They're like mainly focused on Anglo-Saxon jurisdictions.
Yep.
So these types of jurisdictions, they do recognize these type of figures that are used in the US. So, for
Hmm.
example, people that are coming to us with trust, whenever they
Hmm.
come to Spain, obviously it's a figure that or we need to liquidate, or it's something that
Hmm.
we need to recommend these types of jurisdictions.
Hmm.
For example, having a trust, then a Cyprus company or a Maltese company, and then, for example, a company in Spain. With this, we would be able to operate. But having a trust and then a Spanish company or Spanish individual, it's something that we never recommend, because it's a figure that in Spain it's not recognized. Well, in Spain or
Hmm.
in Italy or in France, it's something that we don't recognize. But yeah, these type of structures we've seen them quite a lot.
Hmm.
Obviously, Cyprus corporate tax is 12.5. Malta is 35%, but you can get a tax rate of 30% of what you pay. So in the end, the effective tax rate is only 5%. The only thing I need to tell about these two jurisdictions is that laws are kind of like changing
Mm-hmm.
a lot. So it's a good
Yeah.
thing to a good advisor and a good partner there. So these people is able to guide you with all
Mhm.
the things. Yeah.
Yeah, absolutely. The changing tax landscape. I always tell clients that your your structure is kind of like having a car. It needs to be checked out every so often, every few
Yes.
months or something to make sure that it's going to work. Otherwise,
Yeah. That is
it'll,
correct.
it'll break
Yeah.
down on you. And when
Yeah.
it comes to Malta, especially, you have the emerging idea of the principal purpose test.
Yeah.
So if the principal purpose of a structure is to either legally avoid or to reduce taxes, tax authorities are increasingly setting it aside because the principal purpose must be commercial in nature. Not the
Correct.
tax benefit must be incidental. And especially where that Malta structure has no economic substance, i.e., it's just a shell company. There are no boots on the ground. You don't have like a proper like a family office, or there are no investment decisions because we see people using that to channel passive income. Because within the EU, obviously, it could come to Spain tax free,
Yeah.
and it's only going to be taxed at 5% or whatever in Malta. So if there's no substance, and if the principal purpose of that structure really is tax and there's no real commercial benefit, don't be surprised if the tax office says, let's take a deeper look at
Yeah.
this and probably, yeah.
And the main issue they'll have is obviously with opening a bank account.
Mm,
So because
mm,
obviously banks are very reluctant to open accounts just
mhm,
to companies that are not going to have any activity in the country,
mhm,
just for tax purposes.
mhm.
100% you're not going to be able to open a bank account. Nowadays, it's even more difficult to open a bank account than just to incorporating a company. And
Definitely.
in terms of
Mhm,
international tax, substance is the main thing that they are
mm.
gonna have in every
Yeah.
country. So,
I keep telling clients if something sounds too good to be true, it probably is too good to be true. So,
yeah.
be cautious. Next question. And yes, I see you guys are writing questions below in the comment box. We'll just get to them in the order in which we receive them. So we're going to go through the questions that were submitted in advance first. So thanks for your patience. Uh, Exit taxes. Can you tell us a bit about the exit tax for those leaving Spain?
Yeah, so basically there is exit tax in Spain, but
Mm-hmm.
exit tax it's mainly focused for people, for individuals that are moving to low tax jurisdictions.
Mm-hmm.
For example, there's this thing that I think I've mentioned in previous webinars with you, Darren. It's the quarantine rule.
Mm-hmm.
It's for people that they are living in Spain, they decide to move to a tax haven jurisdiction, then they are still considered for at least the 5 next years, they are still considered Spanish tax residents. So normally when you are going to move to another jurisdiction, you normally kind of like write a letter to the Spanish tax authorities
Mm-hmm.
stating that for the following year you will not be a Spanish tax resident anymore, and that you're moving to this other country. If this other country is a tax haven, then at least during the next following years you will still be considered a Spanish tax resident. But if you are going to other jurisdictions where obviously there's a similar tax to what we have in Spain, then you obviously you don't need to pay any additional taxes.
Mm-hmm. Okay. And that's also interesting. These so-called blacklisted jurisdictions, the list for Spain is different from the EU list, is different from the OECD list. So for those interested, it's worth having a look at the Spain list.
Yes.
Okay.
If you go onto the Spanish tax authorities website, to the Agencia Tributaria, you can check all the double tax treaties that the Spanish
Mhm.
government has, and you can also check the blacklisted jurisdictions Spain has. The good thing with Spain is that we have over 100 double tax treaties, and we also have this thing where you share information with other jurisdictions. So we mainly have with, I wouldn't say all, but like most of the important countries, we do have tax treaties.
Yeah,
But for example,
yeah.
if you're moving to Cayman or things like that, obviously, if you do that, you will have this exit tax.
Yeah, and it's also worth noting that because of the tax treaty network, which is pretty comprehensive, it is really, really comprehensive. I'm glad that you highlighted that Spain does not have on its list of non-cooperative jurisdictions certain jurisdictions that are on the OECD or the EU blacklist. So because of the double tax agreement, the automatic exchange of information, they are not on the blacklist for Spain.
Yeah.
So it's really worth, as you said, checking specifically on the website and see which countries Spain is comfortable doing business with, that they have the agreements, and those that are definitely on that list of non-cooperative
Yeah.
jurisdiction that you want to avoid.
Yeah, and
Mm,
for foreign people, normally they post both the double tax treaty or
mm,
the agreement. They post it both in Spanish and in English, so everybody
mm,
are able to read and look at it. Yeah.
mhm. Okay. I'll just quickly answer this. No, the exit tax doesn't apply if you're moving to Portugal because
No.
it's a jurisdiction that, it's similar and it has a similar
Yeah.
tax rate
No,
and it's not.
normally when moving to EU countries, there's no problem at all. Yeah.
Yeah,
Yeah.
and it just
It's mainly focused for whenever you're
mhm,
moving to a tax haven. Yeah.
yeah, I just saw it pop up in the chat, so I just thought I'll call that one out quickly. What about inheritance taxes? Could you talk us through that? Are there any?
There is inheritance tax here in Spain.
Yeah.
Unfortunately, in Spain, we do have taxes in many areas. One of them is
Yeah.
it's inheritance.
Hmm.
In terms of in terms of inheritance tax, it matters a lot the degree of kinship. So, for example, if you're inheriting something from your parents, it's not the same as if you're inheriting something from a cousin or things like that.
Hmm.
Normally, in terms of the degree of kinship, and also depending on the region of Spain you're living,
Hmm.
you can have some, or you can have different types of allowances.
Hmm.
Normally, when you are inheriting, for example, the primary residence of your parents in most of the regions of Spain, you have like 99% allowance.
Hmm.
So what you pay is very low. Well, it will depend also on the value of the
Value.
asset that
Yeah.
you're getting transferred. Normally, it's better to inherit things rather than having donations. Donations here in Spain,
Hmm.
the taxes are quite high.
Hmm.
But yeah, in terms of inheritance tax, it will depend quite a lot in the degree of kinship. Normally, we have first
Hmm.
degree of kinship, which is between parents and kids, and also between grandparents and kids. Then you have the second degree, which is between uncles and I think and also cousins, and then the third degree of kinship, which is with third parties. Um,
Hmm.
Here, obviously, there are almost like no allowances, and you can pay quite a big amount of money. Yeah.
Yeah. And connected to that, as you mentioned, that would be the concept of forced heirship, which we really do not understand from in the US or the common law jurisdictions. Could you talk a bit about forced heirship?
Sorry
Sorry,
about.
forced heirship. So under Spanish law, some of your assets must go to spouse, some must go to kids.
Yeah.
Yeah.
So basically, normally what people do, it's and what it's recommended, it's normally to set up a will
Oh. Hmm.
before uh be, normally people do it at the age of 50s, 60s, because normally whenever one of the two parents dies,
Mm-hmm.
normally everything, if you don't if you don't do a will, everything goes to your kids. Instead of going, for example, normally you would want your wife to at least administer all the assets, and
Mm-hmm.
then he passes away, then everything is going to the kids or to the heirs. But if you don't set up a will, everything goes directly to the kids. And we've had cases that
Mm-hmm.
the parents didn't set up a will. Everything was under the name of the father, and then the
Mm-hmm.
father died, and everything went to the kids, and the kids weren't even old enough.
Adults. Yeah.
Yeah, they weren't even adults. So at some point, then the wife, she didn't have like any rights, for example, to be
Mm-hmm.
in the primary residency. Also, if also if the kids, for example, they decide to administer everything in some type of way that it's not the good way, it can also cause a problem. So normally we recommend setting a will,
Mm-hmm.
kind of like to decide who's going to administer everything if something happens. Yeah.
Mm. Absolutely, because that's something people tend to forget. They're moving, let's say, from the US to Spain, and sometimes they're liquidating a lot of their assets in the US and investing in property and investing in the new life in Spain, not not remembering that, unfortunately, there are two certainties in life, death and
Yeah.
taxes, right? And when unfortunately they pass, there are consequences that are way different. So whatever estate planning, whatever succession planning you put into place in the US may be rendered null and void in Spain because Spain has its own rules. And so that needs to be carefully thought out sooner rather than later. Mm. Okay. A question that we get every time we do this. US pensions, generally speaking, how are US pensions treated by Spain?
Yeah, and I think this we can connect it with the following
Mhm.
in terms of US Social Security.
Yeah.
Here
Hmm.
here we need to differentiate. I mean, we've told this like multiple times, but we need to differentiate it between public
Hmm.
pensions and private pensions, and also in terms of Social Security, if it's public Social Security, if it comes from a public employment or if it comes from a private employment.
Hmm.
The thing is
Hmm.
that whenever we talk about public, it's people that has been working for the government, for example, public university. These people, this pension is considered public here in Spain.
Hmm.
Uh, if it's a private pension, then this pension will be taxed here in Spain. So public pensions in Spain and also public social security, this type of income, it's not taxed here in Spain, and if it's private, it is taxed. For example, we've had people that they've worked for the government, or
Hmm.
they work for a public university, things like that. All this type of income that they generate as pension, and the social security that they have received, this is not taxed here in Spain.
Hmm.
But if you're getting a pension from the private employment that you had in the US, and also the social security that you had from that employment, then this
Hmm.
is obviously taxed in Spain as regular income. Yeah.
Right. And this is something that is so difficult for Americans to wrap their head around. The idea that the definition, the legal definition of a pension in Spain is different from the definition in the US. So they're saying, but it's a pension according to US law, but you're now in Spain, so we need to look at Spanish law. And because you worked in this case, as you pointed out, for
Yeah.
private sector employment, you do not have a pension according to Spanish law, and
Yeah. That is.
therefore it's going to be taxed, right?
Yeah,
But
but
then
normally it's taxed as employment income, basically. That's.
Exactly, exactly. But fortunately, we have the double tax agreement, which would mean that yes, Spain has the right to tax it, and it will. But you can make the adjustment on your US return once you have a team that understands international tax from the US, and 9 times out of 10, a US domestic tax team will have no clue what to do, and so you will be double taxed. But if your team does have some proficiency with international tax, you're fortunate. So they know how to make the adjustment so that the tax in Spain is offset against any US tax liability. So you're not going to be double taxed, all things being equal. Okay. So that is pensions and social security. You're right. We can combine them into one. And so
Yeah.
then we could jump to the next one. Could you talk? I know this is like a really you know, long-winded question. I mean, the answer is going to be forever, but just, just a very high level. What are the different tax regimes in the different administrative regions of Spain?
Yeah, so basically Spain it's divided into 17 autonomous communities. So it's divided into 17 regions.
Hmm.
Each region has its they don't they almost all of them are ruled or are ruled by the Spanish government, except for one, which is the Basque Country. The Basque Country, they have their own tax system.
Hmm.
Which at some point Catalonia also wanted to have this benefit as well, but they couldn't. Um, but in terms of the difference between the regions, obviously Catalonia is the region where you pay the most taxes. For example, in terms of wealth tax, if you go into the general rule from the Spanish government, normally you have a tax allowance until 700,000. But for example, in Spain, it's only 500,000.
Hmm.
Um, and also in terms of wealth tax, depending on who's governing in each region, there can be some differences in terms of wealth tax because, for example, the right party is governing in Madrid, Andalusia, in Galicia, in some other regions, and in those regions where the right party is governing, there's no wealth tax. So wealth tax it's zero. But if you go onto the left party regions, then you have wealth tax, and obviously you pay quite a lot of taxes. Obviously, once the government saw that, they decided to apply this new tax, which was introduced in 2022, which was the solidarity tax,
Hmm.
which is a tax for people with quite a lot of wealth. So if you have over 3 million of wealth, then you need to declare this tax, which is called the solidarity tax. Basically, they did it so people that were residents in these regions, such as Madrid, Andalusia, didn't
Hmm.
have a huge advantage over the people that was living in the other regions. Obviously, with solidarity tax, uh, the things that you pay wealth tax, and then what you paid in wealth tax, you can deduct it in the solidarity tax. So in the end, you only pay or either wealth tax or
Hmm.
solidarity tax, the people that are living in these regions. But yes, there are like huge differences in the different regions of Spain. So normally we recommend whenever people is trying to move to Spain to decide and check the tax structure on each region before moving to Spain, because I mean, I'm from Catalonia.
Hmm.
Obviously Catalonia it's amazing, and we have like a really nice city, Barcelona.
Hmm.
Uh, but obviously in terms of taxes, it might be better to live in Madrid rather than here, because
Hmm.
obviously here in terms of income tax, we also pay a little bit more than in Madrid. So we normally recommend looking at the regions that you're gonna live before moving to Spain.
Hmm. And as a a segue from that question, what about is when you mentioned 17 regions, are we including like the islands, like the Balearic Islands
Yes.
or
So
Tenerife?
in the 17 regions, we also
Okay.
include the Canary Islands and also
Hmm.
the Balearic Islands. Yeah. And
Right. And
also
do
yeah, and also Ceuta and Melilla, which are in
mhm.
the next to Morocco.
Okay. And do they have like a special tax regime to incentivize people to live and invest there?
I mean, they
Mhm.
in terms of Ceuta and Melilla, they do have
Okay. Hmm.
some type of beneficial kind of like
Hmm.
to incentivize people
Hmm.
living there. If, for example, in this type of in this type of places, obviously a
Hmm.
lot of people that they have in there, there are a lot of immigrants there.
Hmm. Hmm.
Um, so they kind of want to attract people and have more Spanish people to go and live there. So they give them some extra allowances and some benefits. Um, yeah, it's
Hmm.
something that is there. Yeah.
That's quite interesting because we get inquiries from about these special tax regimes. So, for example, just quick comment in Portugal and France, which are obviously next door, they have special tax regimes to incentivize people to move to their distant islands as well.
Yeah.
So, it's again for people considering Spain, it's good to consider Spain in a wider context, including these islands, because it could be attractive to live there from a tax point of view.
Yeah. And for example, in the Canary Islands, they don't they have a instead of having VAT, they have
Hmm.
something different, which is called IGIC,
Hmm.
which obviously the rate is lower than the 21% VAT. So yeah, it's something that is more helpful for them. Yeah.
Hmm. And so connected to this point as well, somebody else has asked, is there much variation between taxes in Valencia versus Malaga versus Alicante or Cadiz? I guess they have kind of narrowed it down to those four
Yes.
places. Mhm.
In terms of Valencia, taxes are
Mhm.
quite similar to Catalonia.
Okay.
Uh, so basically, Valencia, it's I would say in terms of Spain, it's a high tax region. In terms of Malaga, Cádiz, which is Andalusia,
Hmm.
obviously here in terms of income tax, it's very similar to the rest of Spain. The main
Hmm.
benefit is in terms of wealth tax because there's no wealth tax there. And in terms of Alicante, it's right below Valencia, and then the tax system it's very similar there as Valencia. So yeah, I would say the main difference between Valencia and Alicante to the Andalusia to the cities in Andalusia.
Hmm.
Basically, the main difference is it's in terms of wealth tax.
Okay. Right. And just to add to that, for those who kind of narrowed it down to certain regions, you can reach out either to myself and or Ricky for us to model. We do create models where we can create like a simulation of what
Yeah.
your taxes would be if you move to jurisdiction X, Y, and Z. And that could help you narrow it down. If that's something you're looking for, that's something we do offer. Next question. So, so with the digital nomad visa, does a taxable income tax in Spain, is it limited to the person's actual earnings, or does it include earnings from your company? You have a company in the US. We kind of touched on this before where we spoke about it really depends on the nature and the structure of your company, whether there's any substance, is it just a pass through? So, there are a lot of moving pieces with that. And then if you were with us from the beginning, you would have heard Ricky's, breaking news, his commentary on some of the challenges that the nomad visa is having with the special tax regime that's supposed to be
Yeah.
connected to it. So if you missed that, just this is being recorded, obviously, so you can look at it again later on, and you can get his comments at the beginning on that. Next question. With the non-lucrative visa, if we do not work while in Spain, let's say we take a sabbatical year, so we're not working, and we live off our savings, are we still going to be taxed in Spain for the revenue that our company generates? And I'd say the answer is yes. Ricky, you want to comment on that?
So once
Hmm.
you're obviously more than 183 days here in Spain,
Hmm.
obviously you become Spanish tax resident.
Hmm.
As a Spanish tax resident, you're taxed on your worldwide incomes, not
Hmm.
just Spanish incomes. So if you're receiving incomes from the Spanish company, from the US company, obviously you need to declare those here in Spain. We would also need to look if you are like 100% shareholders of the company, we would need to look at the value of those shares in case
Hmm.
you also need to file Form 720 or if you need to file wealth tax as well. But yes, that income would be taxed here in Spain.
Okay. Next kind of connected question. Someone is looking for advice on would it be a better option tax-wise to go with the nomad visa versus the non-lucrative visa? And again, that kind of ties back to the comments that you made earlier, where, for
So
now until things are resolved.
yeah.
Hmm.
So in terms of the non-lucrative visa, obviously
Yeah.
with the non-lucrative visa, it's a type of visa where you cannot work.
Hmm.
So if you cannot work, obviously you cannot apply to the Beckham law if that's the main goal
Hmm.
that you have.
Hmm.
Because obviously to apply to the Beckham law, you need to have an employment agreement with a Spanish company.
Hmm.
If you decide to go with the nomad visa,
Hmm.
obviously you would be able to apply this to the special tax regime similar to the Beckham law. But as I mentioned in the beginning, I recently spoke
Yeah.
with an immigration lawyer, and they mentioned that they were having a lot of issues. People that did apply to the nomad visa, they were having issues to then get to the special tax
Special
regime.
tax regime.
So yeah, so if
Yeah.
your main goal is to
Yeah.
apply to the special tax regime, such as the Beckham law, then I would recommend getting a working visa or some other type of visa. Yeah.
Mhm. So especially if you depending on a lot of passive income, uh, or if you need to work, basically neither of these options would work. So you're looking at one of the working visas as you mentioned. I hope that answers your question. Uh, Next question. If I reside in Spain for more than half the year, do you have to pay taxes on money earned in the US? Obviously, yes, because you're tax resident. I'm specifically wondering, well, because I own a business in the US and I take a draw from the company deposited in the US and I pay taxes in the US. Okay, this is a long story, but essentially, correct me if I'm wrong, Ricky, there's in the US tax rules is a doctrine of constructive receipt, right? So it doesn't matter where in the world you receive the money, if you receive it in a bank account far away or domestically, the point is you received it. And if
Yeah.
you're a tax resident, you're going to be taxable on it. Am I correct in saying that?
Yes, that is correct. I
Hmm.
mean, as we mentioned many times in Spain
Hmm.
and also in the US, you're taxed on your worldwide incomes. So it doesn't matter if you receive it in a Spanish bank account, if it's in a foreign bank account, it's an income that you generated. And since you are taxed on worldwide incomes, you need to declare it and pay tax on it. Obviously, there are double taxation treaties.
Hmm.
And with this, we are able to kind of like avoid double taxation.
Okay. Next question. How someone has, okay, you have rental properties in Spain and you're asking how is it reflected on your US return? So just like it would be if the rental properties were back in the US. So typically on Schedule E, and you get to deduct all the expenses that are ordinary and necessary for a rental property, including, very importantly, depreciation. And depreciation is calculated differently when it's international as opposed to domestic. So keep that in mind. If it is Airbnb, or if it's something that you're more actively involved with, you may need to take advice because then it may be on Schedule C. So just, and so basically the answer, it depends, but typically it'd be on C or E. So you'd need to speak to your US tax team, a US tax team that does international tax, and they should be able to guide you accordingly. So there's that. Sorry, I'm just going through another bunch of questions that came in. I'm looking to relocate to Spain because I have Spanish citizenship through descent. Are the laws just mentioned about US? Okay, right. So does the special tax regime and the treatment and all this stuff we discussed, would it be different if someone is coming to Spain with a Spanish passport as opposed to a foreigner?
Yes,
Mm-hmm.
so people from Spain, Spanish nationals, if they have lived outside of Spain for in before this new law that it was implemented last year with the nomad visa and the
Mm-hmm.
startup, normally one of the requirements to be able to apply for the Beckham law is that you could have been Spanish tax resident for the past 10 years. Obviously,
Mm-hmm.
they limited it now to 5. But yeah, we've had Spanish nationals that they've been living in Luxembourg, in Germany, in different countries. These people, if they've been living outside of Spain for more than 5 years, they can come to Spain and apply to the Beckham law, no problem. Yeah. The only thing is that they will need the employment agreement with the Spanish company, and with this they will be able to apply for the tax regime. Yeah.
Okay. Let's jump into the next question. A US citizen who just got residency last year for Spain, who just got residency in Spain, but they're saying that they only stayed for a few months in 2023 and they had no income in Spain. Is there requirement still to file a Spanish tax return for 2023?
I mean, here we would need
Mm,
to check if you actually qualify to be a Spanish
mm,
tax resident or not.
yeah. Hmm.
Uh, in the case that you actually did qualify as Spanish tax resident,
Hmm.
as we mentioned, you are taxed on worldwide income, so it doesn't matter if you didn't
Hmm.
generate anything in Spain. If you are a Spanish tax resident, you pay on your worldwide income. So if in your case
Hmm.
you obtain
Yeah.
income outside of Spain, you also need to declare those in the Spanish income tax. But yeah, first we need to determine if you qualify as a Spanish tax resident or not. Yeah.
Mm. And it's also worth mentioning, I think. So I think most of the conversations and most of the narrative around tax residency in Spain is around the 183-day rule, but there's also a center of life or center of vital interest
Yes.
or place of habitual abode test.
Yeah.
You want to comment on that?
Yeah, so basically, in terms of the how to determine the if you are actually a tax resident or not, there are 3 rules. The first one is the substantial presence test, which is if you spend more than 183 days in Spain, then you are considered Spanish tax resident. Also, the second rule is the center of economic interest. So, for example, if your primary professional activities, if they are conducted in Spain,
Hmm.
and also, if you are self-employed or otherwise, if everything is conducted in Spain, then you can also be considered Spanish tax resident. And the third rule is the presumption test. So, for example, if your main interest, let's say your wife and kids, they are living here in Spain, they go to school here in Spain, the Spanish tax authorities could also claim that because of these things, you could be a Spanish tax resident. Yeah, so basically it's these three rules.
Right. So, in other words, depending on your circumstances, you can arrive, let's say, in August, September, October 2023, and still trigger tax residence, even though you didn't do the
Yeah,
full 183 days, right?
yeah.
And
But
then Spain,
yeah. No, no, go on, sorry.
no, and just wanted to add to that, then Spain doesn't have like a split year tax treatment like Portugal or the UK, and
Yeah,
therefore you can potentially be exposed for the entire calendar year
yeah.
to Spain taxes, in theory.
Yeah, yeah,
Mhm.
that's 100%. But one thing we normally mention,
Mhm.
whenever you're moving to Spain, obviously if we are able to justify that you were here less than 183 days,
Mhm.
normally we kind of like to justify that you're not tax resident. If you're able to provide a tax return from the foreign country and also a tax residency certificate from the foreign country, then
Hmm.
that will be able to help and kind of like justify to the in
Hmm.
front of the Spanish tax authorities that at least for that year you were a Spanish tax resident. Yeah.
And yeah, that's a service that we also provide, as with any U.S. international tax practitioner, getting
Yeah.
that residency certificate, which the Spanish tax office might want to see. Okay. Next question, just jumping down. Can a mortgage loan reduce the total assets used in calculating the wealth tax in Spain?
Yeah. So in
Hmm.
terms of a mortgage loan, yes, it does. So it reduces the amount of the wealth tax whenever you
Hmm.
you calculate it. But for example, if you have a loan and if you have a mortgage, the mortgage is not deductible in terms of the personal income tax. Only
Hmm.
interest in
Hmm.
the mortgage are the ones that are deductible. But in terms of wealth tax, yes, it does reduce the value. Yeah.
Okay, fantastic. Next question. Are there any exclusions? So someone is talking about inheritance tax in Spain, but the beneficiaries are in Spain, but the assets are in the US. So I guess the point is, or the question is, does the inheritance tax extend to assets outside of Spain?
Yes.
And yeah.
Yeah. So if the person that is inheriting the asset, if it's in Spain, this person will need to pay taxes in Spain. Yes.
Mm. Even though the assets are back in the US.
Yeah.
Right. And then I guess conversely, if the person who's inheriting it is not tax resident in Spain, then
Yeah.
they don't- they don't have to pay. Okay. So I'm just having a look at the other chat windows to see if there are any other questions. Nope. Okay. So I think that's it for this evening. Ricky, whoops, wait, Tim just put a question in. Okay, so he's asking if one invests 500K in Spain with the golden visa, what are the tax consequences? Oh, that depends, right? But do you want to comment on
Yeah.
it?
Well, I mean, the thing with the golden visa, it was all over the news this past few months because the um, the Spanish Prime Minister was saying that they were trying to get rid of the golden visa because a lot of foreigners were just especially talking about people
Mm,
from Russia and China getting making big investments kind of like to obtain the Spanish nationality.
mm,
Uh, Basically, in terms of tax consequences, it will depend if you make the investment and just obtain the passport. Getting the passport, it's something that it's completely normal. A lot of people get the Spanish passport, but it will depend if you're actually residing in Spain or if you're living somewhere else. Because it's what the first thing we were talking about, the visa. One thing is the visa, and the other
mm,
thing is the tax residency. So you can make the investment and get the Spanish passport, but if you're not living in Spain, obviously you won't be taxed here in Spain. But for if you make the investment and get an apartment and then start getting rents from this apartment, obviously
mhm,
for the rental income, you will need to file the um, the foreign income tax.
mm,
But yes, it will depend if you make the investment and live in Spain, or if you make the investment and just obtain the passport and live in another country.
yeah, I mean, and this is not so unfamiliar to Americans because even in the US, tax law is different from immigration law. So regardless of how you enter and how you reside in the US, to some extent, I know there are exceptions, but generally speaking, the tax law is blind to your immigration status. You can be there illegally in theory and still have the responsibility to file and pay your taxes. And similarly in Spain, however you get to Spain, that's a different discussion. But once you trigger tax residence by one of the three ways Ricky pointed out earlier, regardless of how you got there, there's a tax responsibility. But I guess that's one of the selling points potentially of the golden visa, in that you get the the privilege or the opportunity to reside in Spain, but there's no obligation. You
Yeah,
you can just pop in for a week or two or whatever every year, but you're not obliged to remain in Spain. Therefore, you can choose not to be tax resident in Spain.
yeah,
Yeah,
that's
so
correct.
it's a choice, yeah. Okay. We're getting a whole new flood of questions. Unfortunately, I don't know if we'll be able to answer all, so let's see what we can get before the top of the hour. Someone is asking about investment advice. We kind of don't give investment advice. We kind of restrict the conversation to tax, just to, swim in our lane kind of thing. Uh, Next question, Sarah's asking, if you haven't been declaring worldwide taxes, you haven't been paying your taxes in Spain because you were paying in the US and thought that that was enough, but you realize, hey, I'm a Spanish tax resident, and you need to get right with the Spanish tax office. Let's just summarize it like that. What is the best way of coming forward and doing that, and getting things right with the Spanish tax authorities?
I mean, it will also depend on how many years you have been doing this.
Mm-hmm.
Obviously, there's a prescription here in Spain. So
Mm-hmm.
after 4 years, what you did in the past, it's in terms of taxes and in terms of personal income tax,
Mm-hmm.
it's prescribed. Depending on the incomes that you generated,
Mm-hmm.
and how you acted on and how you operated here in Spain, it will depend
Mm-hmm.
if we decide or just to at some point say, okay, I'm going to start filing this year, or if you did generate a lot of incomes and you earn a lot of money, then maybe it's better to make and to file all the taxes that you should have. It depends on every situation. I mean, I guess we will need to look closely when you came to Spain, if you've
Mm-hmm.
been doing this for a lot of time or
Mm-hmm.
not. We know that some people, obviously, at the beginning, not many people knew that since you were already paying taxes in the US, people were thinking, okay, I'm already paying taxes in the US. I don't need to pay anything here in Spain.
Mm-hmm.
No, you need to pay taxes in the US because you are a US citizen, but you need to pay taxes in Spain because you are a Spanish tax resident. Um, we've had people that with these people we've had to file taxes from previous years because they had never filed, but it depends on every situation. Also, we need to check if in this case you would also qualify to file from 720, declaring all the assets that you have outside of Spain, if they're like worth more of it than 50,000 euros.
Okay.
Yeah.
I hope that answers your question. You don't want to end up like Shakira, right?
Yeah.
So, moving on. So, Scott is saying, my wife is Colombian with Spanish citizenship. I'm a US citizen living with her and consulting as an independent consultant with organizations outside of Spain. Is the LLC in the US advisable as a strategy to minimize my tax burden in Spain? Is there something else we should be considering? What are your thoughts, Ricky?
Mm, So I guess this person,
Mhm.
if are they living in Spain or are
It's
they?
it sounds as if they're living in Spain.
Yeah,
So, just my first thoughts will be register as an autonomo, as you said
yeah,
earlier,
yeah.
and just
One of the options, I think the most advisable thing, I think I would say, it's register as an autonomous here, and then with
mhm,
the autonomous fee, obviously you start paying Social Security. Also you can get the advantage of obtaining
mhm,
Spanish healthcare,
mhm,
which is from how you're doing it right now. Obviously, you are not able to obtain a Spanish healthcare.
mhm,
Uh, Obviously, once you become an autonomo, then you would be able either to invoice, as we mentioned earlier, your LLC. So in this case, the net profit of the LLC should be zero,
mhm,
and you pay the entire tax here in Spain, or just stop working with the LLC and invoicing directly to the US clients. The thing is that a lot of people, they also have their network already linked with their US LLC, so they
Mm-hmm.
don't want to liquidate or stop working with the LLC. So then what we tell them is, okay, then invoice your LLC. So the net profit of the company at the end of the year is zero, and it doesn't go distributed to your personal income tax in Spain.
Okay, yeah, yeah, absolutely. I think it's a good idea to kind of maintain the LLC because, as you know, the U.S. is a very litigious jurisdiction.
Yeah.
And I always tell clients if they haven't been sued in the US, that's because they haven't been doing business long enough. Everybody gets sued. And having that limited liability protection is super helpful. So there may be no tax benefit to it. It's not really a tax play, but it's an opportunity to limit your potential liability. So
Yeah.
that to me, that's what it's about. Ricky, we have 3 requests or 4 requests. People asking how can they get in touch with Ricky? Ricky, what's the best way to reach you?
Well, I was reading, yeah, we're based in our firm, it's based in Barcelona. We also have an
Mhm,
office in Madrid,
mhm,
but the headquarters are based in Barcelona. Yeah, we do offer private consultations. The best way to get in touch with us, it's either by setting up a consultation through our website, which is www.gpasoc.com, or you can just either send me an email, which I'll write my email in the chat so everybody has it. And you can just send me an email, and then we can just like set up a consultation, and then we can start working from there.
Okay, fantastic. Thank you very much for your time, Ricky. Thank you for joining us this evening. My name is Derren Joseph, HCJ.tax, and we will see you next time. Bye bye.
Yeah. Thank you so much. Bye.
Okay, bye bye.